Over the past 20 years, one of the best performing investment strategies has been a passive investment strategy that tracks a broad stock market index such as the S&P 500. This is often achieved through the use of index funds or exchange-traded funds called ETFs that mimic the performance of the index. Index funds and ETFs work by holding a portfolio of stocks that closely match the composition of a specific stock market index such as the S&P 500. The index is chosen based on the investment goal and risk tolerance of the investor. By holding a diversified portfolio of stocks, index funds and ETFs provide investors with exposure to the overall performance of the stock market rather than the performance of individual stocks. And as a result, index funds and ETFs have lower management fees and are less risky than actively managed funds. Now, another strategy that has seen great returns in the past 20 years is a value investing strategy. Value investing is an investment strategy that involves buying stocks or other securities that are trading at a lower price than their intrinsic value. The idea is that over time the market will recognize the true value of the stock and the price will rise, resulting in a profit for the investor. Value investors typically focus on financial metrics such as price to earnings ratio, price to book ratio and cash flow when selecting investments. It's worth noting that past performance is not a guarantee of future results, and it's important to consult with a financial advisor before making any investment decisions because, quite frankly, I'm not a registered financial advisor nor do I aspire to be one. I did, however, feel like it might be of interest to my audience to talk about a subject like this. And if you find this video helpful, please click the like button and subscribe to my channel. As a thank you, I will now show you a picture of a monkey eating a banana. Right. Now that we've got that out of the way, it's time to look at 5 different investment strategies with a guaranteed return. First up are CDs, and I'm not talking about those old things you used to use while listening to music. CD stands for Certificates of Deposit, and they were a type of savings account offered by banks and credit unions, and they typically have a fixed interest rate and a fixed term, such as 6 months or 2 years. The investor deposits money into the account and earns interest on it, and the principal is returned to the investor at the end of the term. CDs are considered a low-risk investment, but they typically offer lower returns than other types of investments. And then we have bonds, and these are a type of debt security issued by companies and governments. They pay a fixed rate of interest to the bondholder, and the principal is returned at the bond's maturity date. Bonds are considered to be a low to medium risk investment, and the return on investment is typically higher than that of CDs. While researching this topic, annuities came up as well. And these are a type of insurance contract that provide a guaranteed stream of income to the investor, typically in retirement. And the investor makes a lump sum payment of a series of payments to the insurance company, and in return, the company agrees to make regular payments to the investor for a specified period of time. Annuities are considered a low to medium risk investment, and the return on investment is typically lower than that of other types of investments. And then we have whole life insurance. And whole life insurance is a type of life insurance policy that also has a savings component. The policyholder pays premiums, and a portion of those premiums goes into a savings account that earns interest. The savings account can be used to pay the death benefit or can be borrowed against. And the return on investment of the whole life insurance is typically lower than other types of investments, but it has the added benefit of providing death benefit protection. Now, I'm curious to hear if you already heard of the next one, so let us know if you did, but it's a guaranteed investment certificates. And guaranteed investment certificates are a type of investment offered by banks and credit unions. And they typically have a fixed interest rate in a fixed term, such as 6 months or 2 years. And the investor deposits money into the account and earns interest on it. And the principal is returned to the investor at the end of the term. Now, GICs are considered a low-risk investment, but they typically offer lower returns than other types of investments as well. Now, it's worth noting that all of these investment strategies supposedly have a guaranteed return of investment, but the amount of return may vary. It's important to consult with a financial advisor before making any investment decisions and consider one's risk tolerance and investment goals. Investing is taking risk, and we've just discussed the options with a lower risk. Now, let's look at some higher risk investments as well. First up is the old school trading of stocks. Stock trading involves buying and selling shares of publicly traded companies on a stock exchange. And the goal is to buy low and to sell high. But the stock market is subject to fluctuations, and there's always a risk that the value of the stock will decrease, resulting in a loss. That is, if you sell. Now, stock traders use various strategies to try to predict the movement of stock prices, such as technical analysis or fundamental analysis. I've made a video on this and I'll link it at the end of this one. Now, when we were in a bull market in crypto, a lot of people decided to go and do day trading. And this is a type of stock trading where the trader buys and sells shares of stocks within the same trading day. It is considered a high-risk strategy because the trader is making decisions based on the short-term price movements, which can be highly volatile. Now, day traders use various strategies such as scalping, which is buying and selling shares in a very short period of time, or swing trading, which is holding a position for a few days. And another high-risk investment strategy is trading in options. And this is a type of derivative trading where the trader buys or sells the right to buy or sell an underlying asset, such as a stock, at a specific price at a specific time. Options trading can be used for speculation or as a hedging strategy. It is considered a high-risk strategy because the value of the option can be highly dependent on the movement of the underlying asset. And options can expire worthless if the underlying asset doesn't move as expected. Now, when I still was in school many years ago, I fiddled around with options trading myself, but never really got the hang of it. Even though I know people that still do and sometimes are successful with it as well. And then we've got two more high-risk investment strategies. The next one shouldn't be a surprise on this channel, which is cryptocurrency, or trading in it, that is. And this involves buying and selling digital currencies such as Bitcoin on a cryptocurrency exchange. The value of cryptocurrencies is highly volatile and there is a risk that the value of the currency will decrease, resulting in a loss if you sell. Now, cryptocurrency traders use various strategies such as buying and holding or using technical analysis to try to predict the movement of prices. And the final one is investing through a venture capital. A VC is an equity investment in a startup company. The aim of venture capital is to invest in early stage companies that have a high growth potential and can generate substantial returns. It's considered a high risk strategy because the vast majority of startups fail, and it's hard to predict which companies will succeed. Furthermore, VC investments are illiquid, meaning that it can take years for an investor to realize their return. In crypto, there are many VCs available to allow you to invest in seed and or private sales. One of them is SolarDAO, a long-time sponsor and friend of the channel. Check out their Discord in the description down below. But be sure to know that this video is not sponsored by them. Now, it's worth noting that all these investment strategies pose a high risk of losing money, but they also have the potential for higher returns. Right, and if you want to learn more about crypto, please click that playlist right there. And that's it for now, so I'll see you next time. Doei!